Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jesper Johansen, founder and CEO of Northstake, to discuss helping institutions securely participate in digital asset investments and crypto staking. Jesper, it's great to have you with us. Welcome to TradeTalks.
Thank you so much, Jill. Great to be here.
You got it. 52% of Fortune 100 companies have been pursuing crypto, blockchain, other Web3 initiatives since the start of 2020, according to a Coinbase report. What are the drivers behind that?
Well, I think the Coinbase report was pretty clear on it, right? It's driven by the need to stay competitive. What I've seen through my past with Accenture and Deloitte is that the adoption curves are just continuing into the sky, and consequently, institutional investors are moving in, and this drives, I think, an increased investment from enterprises and corporates. So it's no surprise to see that that level of investment and participation from the top 100.
How has the crypto industry's lackluster KYC and anti-money laundering checks hinder institutional adoption?
Well, I mean, in crypto, we've always thought about being sort of at the forefront and innovating. But it comes a time when crypto and blockchain, and crypto in particular, needs to adopt the sort of real world principles. That means laws, regulations, so on and so forth. Right now, what we're seeing, I think, is a increase in how both lawmakers and regulators are acknowledging that blockchain technologies will be the future foundation for which Web3 is built, i.e. the need for KYC and AML becomes a reality for all of the projects, all of the service providers, and everyone who wants to participate, because this is a growing asset class, and as such, it needs regulation. And the lack thereof will then hinder any sort of investments or growth disproportionately, I think, depending on where the regulation is prevalent the most.
How come staking as a service providers and liquid staking protocols haven't yet met the needs of institutions?
I still think that they operate on the forefront, adopt or find out how to bridge native crypto values, practices, and sort of attitudes with what a mature sort of technology, or what a. Can you still hear me? Can you hear me?
Yep, we can hear you. Keep going.
Sorry about that. I still think that they need to accept and figure out how to bridge their technologies and their service offerings into a real world where KYC, counterparty assessment, AML laws, and counter-terrorist financing are vitally important. So, yeah, to answer your question, as a service provider, as a observer of liquid staking derivatives, there will be an increasing need to regulate these, and that regulation does not exist yet, which is why we're seeing sort of a lag in how it's regulated.
So, Jesper, where does Northstake fit in the crypto ecosystems, and what solutions does it provide?
So, we are a regulated crypto asset service providers. We specialize in creating regulatory compliant staking products. Those are products that inherently own some of the values that I spoke to earlier. What that means is that we stake all of our clients' assets in compliance with current and also future regulation. This is, among other, sort of the common anti-money laundering, as well as EU's anti-money laundering laws, as well as markets in crypto assets, which is the future EU regulation taking effect in 2024. On top of that, we do rigorous risk assessment and counterparty assessment both ways, ensuring that institutional investors do not have any sort of unknown counterparties, or are at risk exposing themselves to sanctioned entities or funds, which is one of the key issues I think we see with other staking providers and staking protocols.
How does Northstake leverage its partners such as Fireblocks to satisfy client demand?
Well, for us, we are a crypto staking product company, if you like, which means that we build on top of the best infrastructure technology that we can find. Fireblocks is ranked among the best when it comes to security and MPC technology for custody of clients' assets.
And finally, what is the longer term outlook for Northstake and broader institutional adoption?
Well, we're looking to build indices products that combine different thematics, assets into staking products, still keeping it on chain and still keeping it compliant with regards to the developing regulatory frameworks that we see. For our clients, Web3 and crypto is a long-term investment, and any sort of long-term investment in this space is by definition a staking product, because no professional investor would leave the staking yield on the table. So as such, they require products that can give them a broad exposure, not only a single asset, but also multiple assets and potentially also protocols, but still, and vitally important, done so in a compliant way.
Okay, Jesper, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.